What's up, fellas? We got another video today. Today I'm gonna show y'all how I find my drawn liquidity for the day and what I do sort of in the morning to figure out what my drawn liquidity is. So we're gonna go over these three things first. This is kind of like just the basics of what I use to find my drawn liquidity and what drawn liquidities I use. So first, price needs to be trending. We need to be moving in a direction where I can take a trade, not chopping. We just need to be moving in a general direction. So when we're actually moving, I take a trade to the high of our retrace leg. Well, it doesn't have to be a retrace leg, but let's say this is the chart, right? We've been trending down, then we make a flip and we start trending bullish again. I'm targeting these highs that we made when we were trending lower. All of these would be something that I want to trend, or I would want to trade to as my drawn liquidity. Because what does price need to take out in order to continue to go higher? These highs. Can't just skip these highs and go higher. It needs to take out these highs in order for price to go higher. So number one, price needs to be trending, or else I don't really have any drawn liquidities. Price doesn't tell me where it wants to go. Alright, next is a protected drawn liquidity. So that's alright, we're trending upwards, right? Let's say we made this low into a fair value gap. Let's say fair value gap was right here, we made this low. I'll show you some examples because it's kind of hard to explain like this, but when we do this, most of the time we're going to come down, edge this low, and then or go back to the upside. We're not going to take out this low. It's a protected low. It's a low that we don't need to take out to continue this uptrend. So I call it protected. Also, the fact that it's in a fair value gap makes it a little bit more protected because we already filled this fair value gap. We don't need to resweep this low in order to go higher. So that kind of just is like my protected drawn liquidity. I don't want to target these drawn liquidities because I don't think they're probable and I don't believe that they will get hit for the day. They could always get hit with the most perfect setup in the entire world, and I don't care. I literally just won't take a trade. That's some protected draws. All right. Lastly, we got NQ or ES. So NQ and ES move together. Let's say they're both going like this, both trending upwards. One's NQ, one's ES. But let's say this is NQ, this is ES. Let's say we hit something like this. Whoops. Okay. Just taking out these highs. But ES is like this. Same candle right here, same exact time. But NQ is taking out these highs and ES has left them behind. So what does this mean for me to trade? Well, let's say we've got some highs over here we want to target, right? Just say we want to target these highs over here on ES or NQ. We'll just say we have another one right there. You want to target the one that's already taken out the drawn liquidity or closer to the next draw, right? So this one's lagging behind. They move the exact same pretty much all the time, but you'll usually find one that's a little bit behind or one that's a little bit ahead. And this is simply just because they move a little bit differently. Like, they're not always going to be the exact same. So when we see this, we see, okay, NQ is moving more bullish right now. We're pushing higher up before ES. So why in the world would I take a trade on ES when NQ is pushing higher? Right? So the reason I do that is because, let's say this is NQ and we're trying to take a trade to NQ. Say we've got that high we want to take a trade to, retrace, bang, take our entry right here on NQ, stop loss below, TP at the high. Let's say we take this trade, right? We want to take that trade at least. And then here's the ES. Got a little alarm going off. And here's the ES. ES is doing the same exact thing. except ES has already taken out the high when we're taking our trade on 9Q. So what this can do is cause an SMT. SMT means one of the indexes has taken out the high before the other one. And what do we know with this? We know highs and lows have orders above them looking to fill to get or to push price back to the downside here because we just took out a high. So why in the world would I want to take a trade on the lagging index? This pair has not shown me it wants to be bullish. It's created an S&P at the highs, meaning it could push price down here. Why would I want to take a trade here? It just doesn't make sense. You know, it has less probable statistics of actually running to this high. It could just dilly-dally and then drop, and then I would get fucked. It could go to the high. I don't really care. I don't take these type of trades. It's just improbable for me. I've seen it play out less times than I've seen it played out. All right, now we got the basics out of the way. We'll sort of go and show some examples. All right, so trending. When we're trending, we can obviously see we're just literally going to take out the next high. So bang, retrace, take out this high. 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 You can see it. It's a great draw on liquidity. It's nothing like absolutely insane, but in order for us to move higher, you can see we have to take out this high. We can't just skip it. Same thing if we're moving down. We're gonna put in those retraces and we're gonna go take out the next low. Bearish, retrace, take out this low. Bearish, retrace, take out this low. Bearish, retrace, take out this low. And then we can see we get a reversal here. And how do we know we get a reversal here? We create a higher high. This was the lower high that we have just made. Bang, high, lower high, lower high. We want to come up, retrace here, and then print to the downside. We didn't. Took out that high, continued moving bullish. There's the bullish structure right there. So that's pretty much how I use trends as finding like my draw on liquidity. I'm just looking for the next high in the retrace leg because I know that needs to get taken out in order for price to continue to the upside. All right, what do we got next? Protected draw on liquidity. Let's see if we can find any good examples here. This low right here, perfect example. In a daily gap, if we really want to be bullish here, we put in this low to be the low, right? This low down here. If we want to be bullish, we put in this low. So we don't expect this low to get taken out. Then we move higher, then we retrace, and then we're supposed to move higher again. We have not taken out this high, so we have not made it a higher high yet. But in order for price to stay bullish here, we need to not make a lower low, which would be not going below this low. So we would not want price to come and take out this low, or I will be like, okay, we're bearish again. We have made a lower low, we're going to go lower. But this is sort of what a protected low looks like. It's a low, a very prominent low inside of a fair value gap. So I don't expect this to get hit at all if we're truly bullish here. If we're not, I don't really care what it does. Price has been bullshitting around. Let's find another example. Right here. I don't care what in the world you're trying to take here. Price is bullish right here. This put in a low in a fair value gap. I don't expect this to get taken unless we flip bearish, which we flip bearish, trending down for a day or two, and we take out that low. So it's literally just this over and over again. You'll start to notice it when you're trading, and you just need to be journaling about it. You just need to be like, okay, I've seen this low not get taken out multiple times before. Not the exact low, obviously, but okay, I've seen this scenario happen. I know not to trade now. That's pretty much how I use it and how I collect my data. So you should be too. That's about it for the protected lows. It's pretty obvious. Just an obvious low inside of fair value gap or high. Let's see if we can find any highs. Not seeing anything. So yeah, we won't find the highs. Hopefully you guys get it. It's a pretty obvious low inside of fair value gap, like I just said. I don't expect this to get taken out unless we're truly bearish here. We'll see. All right, we'll go to NQ and ES, but we can't do them together. Hopefully that lagging index made sense though. We might be able to actually. Where did I take my trade that one day? I think it was right here. So it's gonna be hard to explain, but we'll just go over it. So this is a trade I took. Break even on liquidity. Took my entry right here. So what I failed to recognize during this trade was that ES was already moving lower. ES was already pushing lower. I think it was about at like this point-ish on the chart when I took my entry. So what happened here? Well, let's just say ES is right here. I'm just gonna draw it out. Moving up. Then we got a nice bearish down candle. Maybe that's where we took our entry. Let's just say it's the same candle. This is our break even. This is our TP down here. Just for an example. Say this is ES, alright? So we go one more candle on NQ. Looking great, right? ES has already taken out this low. ES has already hit the break even low. So why just like who knows if we're gonna reverse off of this? So if we have an S&T, which means one of the indexes doesn't take out the lower high that I'm targeting, or it's my break even at, I just go break even. I don't want to risk anything stupid. So like for this example, NQ has not taken out this low yet, but let's say ES has, then I would take my trade on ES before. Like I would have already known this because I know ES is more bearish in this scenario, but I didn't this time, so good learning opportunity. But literally just ES took out a low before, and I've seen it it's happened to me many times before, where the other index that I don't take a trade on takes the low or the high before the other one, and then I lose, and it's not even a break even because I'm too stupid, and I just go, and I don't even go break even, it just loses. So hopefully these are some lessons, some good lessons for some draw liquidity for you guys. If you have any questions, just ask me in the comments. I'll be happy to respond. Also, a free Discord if you're interested in getting some more education. I don't mentor, I don't do nothing. As I'm unprofitable, it's literally just like a trading community. But yeah, hopefully you guys enjoyed this video. Catch y'all later.